host will be Sunny Wilde.
Okay, thanks, Kenny. Let me go ahead and start sharing my presentation here. Okay, there you go. Now, can you see it?
Yes.
Perfect. Okay, so again, Kelly just wrapped up on the cost share program. I am going to address the Missouri Transportation Finance Corporation, which you will commonly refer to as the MTFC, or the State Infrastructure Bank, the SIB. So MTFC, SIB, those acronyms get used pretty interchangeably, but basically it's the loan program that we have available to offer loans to entities to deliver transportation projects. So again, I'm Sunny Wilde from Financial Services here at MoDOT Central Office, and my team does administer the MTFC loan program for the department. Okay, so kind of the overview and objectives of the program is exactly that: to provide direct loans for transportation projects within the state of Missouri. These loans must help to achieve continued economic, social, and commercial growth of Missouri, as well as be for projects that are in the public interest and promote the health, safety, and general welfare of Missouri citizens. Okay, the structure of the MTFC is administered by an 8-member board of directors that includes 3 members from the Missouri Highways and Transportation Commission, 3 members of MoDOT staff, including the director, the chief financial officer, and the multimodal director, and then 2 additional non-MoDOT members. Typically, these are people with a finance background from somewhere within our state, so from the communities. There's also 6 officers that administer or basically are responsible for the MTFC, and that's the president, vice president, secretary, treasurer, assistant treasurer, and the executive director. Again, that is partial members of the board and other financial services, or I'm sorry, other MoDOT staff. So basically, I think the real gist I want to get here, it's not financial services staff or financial services giving the final approval or denial of the loan applications. However, the FS staff are the ones working directly with the applicants or the districts to gather information, to assess and review the loan request, to prepare and present to the board for consideration. Kind of go through, again, this is a loan application. It's an application process. So it's going to be used an application very similar to the cost share application, because we're going to look for a lot of the same information to understand the project. So I'll kind of go through kind of what's looked at and some requirements regarding that. Eligibility basically includes any highway project eligible for federal assistance under Title 23 of the U.S. Code, and any transit capital project eligible for federal assistance as defined in Section 5302 of Title 49 of the U.S. Code. So basically, examples are roadway projects, public roadways, basically anything that's a major collector or higher, so would be eligible for this. Any bridge that's on the state highway, that's included in FHWA's bridge inventory, so this would include off-system bridge projects. Some other examples: bike and pedestrian facilities, so bicycle and pedestrian facilities on public roadways. And then mass transportation capital projects that would otherwise be eligible for federal funding. So and that's just a few examples. When you go out on our website, and I'll share that link later, there's a lot of things that are eligible for an MTFC loan. So if you ever have questions, feel free to reach out to us, and we can definitely dig in and make sure that the project would be eligible. Again, the MTFC can provide financial support to both public and private sponsors of eligible transportation projects, and consists in financing any stage of the project's development. So again, I think that's probably, just so you know, most of the time, most of our borrowers are public entities, but public or private sponsors are eligible for a loan. I can say our preference usually is to work directly with a public entity, just because they're less risky. As we all know, with the impacts of the pandemic, businesses are really subject to economic downturns, and although governments are, usually the cities and counties survive that. So as far as repayment, we usually won't have a default then. But also for eligible projects, the loan can be used for, like I mentioned, basically any phase of the project. So we can talk about planning, design, right-of-way acquisition, construction of the project, and so forth. And for those non-infrastructure projects, just some of those non-infrastructure projects that don't fall into some of those definitions. But okay. Again, the loan amounts, again, there's a minimum. So there's a minimum of $50,000 before a loan will be considered. So it needs to be $50,000 or greater. However, requests greater than $10 million do require pre-approval. Pre-approval must be obtained prior to the application submittal. So we'd like to have that prior approval already noted and indicated when that submission of that application. So this includes requesting in writing an exception to the Chief Financial Officer, explaining why that exception is requested. Again, typically we're going to, there's going to be several questions and maybe additional information that we'll want to know, like what the loan amount is and why there's a need for greater than $10 million. We'll probably ask some questions too about liquidity of the loan. So we'll want to know what the repayment plan is, what they're committing, and so forth. Terms of the loan. So just again, there's a maximum of 15 years is what we limit on the MTFC. And any request, but however, any request greater than 10 years, again, also requires pre-approval. Again, it's the same process. We would request that the prior approval be obtained prior to the application submittal. This includes requesting in writing, again, the exception for the loan terms for greater than 10 years to the Chief Financial Officer, kind of explaining why there's a 10-year, a need for something greater than 10 years. But again, the maximum would be 15-year loan term. And then the interest rate, typically that's equal to the municipal borrowing rates. So that's determined based on the date of application's due dates. So when the date of the application due date, so we have scheduled MTFC meetings and we'll have application due dates established. And those application due dates is the date that we will access the municipal borrowing rates, and that's the rates that will be used to determine our lending rate at that time for that loan application. So then I'll go into the interest rate analysis, and that's basically kind of determining, kind of looking at the rate and the lending rate and consideration of the terms for the entity interested in borrowing. So if an entity is rated by a rating entity, like they have a Moody's or a Standard & Poor's rating, they should provide their rating letter at the time of application. And then typically that rating is what's used or considered when considering their lending rate. Obviously they're experts in that area. They can kind of give us a rating, and then typically then the rate that we will apply for our loan would be comparable to their rating at that point. If an entity is not rated, we will consider the following to determine the borrower's interest rate. And that is, one, the debt coverage ratio. So the borrower's debt coverage ratio, basically that is there ample revenue to cover their loan payment? And for instance, if they're wanting $1 million loan and their payment's going to be $250,000, but they're only showing with the revenue they're pledging that they're generating $200,000, we're going to have some concerns about how they anticipate making that payment. So what we want to see there usually is at least a 2 times the coverage ratio, if not more than that. We want to show that they are very liquid and making sure that we have repayment on that. Another thing is the dedicated revenue streams. So typically we want to see more than one. So when they're talking about what they're going to use for repayment of their loan, we want to know like what they're pledging. And again, we like to see at least more than one dedicated revenue. Often the things that we will see are dedicated transportation taxes. So like a sales tax, maybe in that community that's dedicated specifically for transportation projects. We will sometimes just see general sales tax. So again, it's a sales tax. It's generated based on sales, but it's something that they've dedicated for that repayment on that transportation project. The loan terms. Basically, the length of the loan terms is another thing that takes into consideration. Is it going to be a 5-year loan? Is it going to be a 10-year loan? If it's going to be a 15-year loan, those are the things. So it's just like a loan that you and I would get from the bank. Obviously, the longer the term, the higher the interest rate. It's a little more risky and so forth. So that's kind of the same kind of concept that we apply when assessing the MTFC loan consideration. So those are the 3 main things that we consider. There's other things that could be considered. For instance, is it a private borrower versus a public borrower, like we kind of talked before. Because in those cases, we might want some collateral pledged. Again, cities and counties tend to exist, as well as they also, have some other federal funding components that route through us that we have access to if for some reason they would default, that would help us recover the cost of that loan. The other things that we look at, I talked about, does the pledge stand to exist through the term of the loan? For instance, I talked about a dedicated transportation sales tax, or maybe a general sales tax, or maybe there's a project-specific tax that's been passed. But basically, the other thing we want to consider is if they're asking for a 10-year loan, I want to know that their dedicated revenue stream's not committed for 5 years with hopes of passing an extension. That's a concern for us. I want to know that if they've got a 5-year loan repayment, that they've got the dedicated revenue source is going to go well beyond that repayment period, so that we know that they're at least going to generate that revenue beyond the repayment terms. And again, talking about some of those, when you talk about the debt coverage ratio, one of the things that we're looking at is if they've got a repayment pledge, whatever that repayment pledge is, what other commitments do they already have against that? Do they already have existing loans? Do they have existing leases that they're paying out of that dedicated revenue? Those are the kinds of things that we're going to need to know from them. Also, the consistency and the stability of that revenue stream. So typically what we're wanting to see is at least a three-year history of what that revenue source has generated. And if it's not consistent, we might want to go back and see, a further history to kind of see what's been happening. Obviously, with the economic impacts the last couple of years, we might see more of that, and so we may have to assess more history or kind of see what's starting to happen with the economy in general. The other thing we might want to look at is if it's a new tax, is if it's got another tax in that community that has a comparable base. For instance, if it's a sales tax, so that we can kind of estimate and generate what we think if we've got a general sales tax and we kind of know it's a half-cent sales tax, and this is what it's generated over the last 10 years. But this is a new transportation half-cent sales tax that's applied on the same base. It kind of gives us an idea, again, of what we would anticipate that revenue stream generating for the next few years. And then if that revenue stream does not seem stable, we will ask them to consider other pledges, or at least a secondary pledge, or maybe even a third pledge to back that up in case one of those would default. Okay. I already went into this, but the loan security and dedicated revenue source, what are they going to repledge for repayment? Some examples that we might include would be a voter-approved tax dedicated to secure the payment of the debt. So that could be a specific, transportation tax, maybe specific to the project, maybe just for transportation-related projects in that area. That's one. Entity-issued bonds, so some bondings to generate the revenue then to repay that debt. Or entity-designated federal monies administered by MoDOT. And we kind of use those. Those are one of the things that we often will work with cities and counties kind of as a backup to. If it's an entity that gets CART funds from MoDOT, if it's an entity that gets federal funds from MoDOT, so forth, we'll ask them to basically commit that if their other dedicated revenue sources do not generate enough funds to repay the loan debt, that we have the ability to basically cease those funds and collect those to basically help cover their default or their inability to pay. The other thing is annually, the entity will have to certify their pledge for the repayment. So you'll see here annual certification. Annually, which will be covered in their loan agreement, we do require that the entity provide a letter certifying the public entity's revenues plus expended balances from the prior years are sufficient to meet its obligation to repay the loan. We will also ask for the year-end financial statements and the entity's most recently approved budget. So in that budget, we do expect to see a separate line for the MTFC loan repayment. Basically, we want to see that the entity has committed. Not only did they make it, not only does their financial statement show they're going to be able to, but that we want to see that continued commitment in their budget then to repay that loan. These are due annually within 30 days of the entity's budget approval. And like I said, that will be outlined in their loan agreement, that expectation. Part of the loan process does require a loan application fee. So the loan application fees are non-refundable. The only time that would be refundable is if the MTFC does not have sufficient funds for the loan. So if they came forward and said, I want a $10 million loan and we only had $7 million, we would have to say, sorry, we can't service this loan, and then we would return their application fee. If at some point, if they apply and they determine that they want to drop the application or no longer pursue it, typically then those MTFC loan application fees are non-refundable. The application fees are also due at the time of application. So again, I will share with you the website that kind of shows when applications are due. And the expectation is the application be submitted by that deadline, as well as the application fee be submitted to us at that time as well. Kind of go over the application loan fee. It just depends on whether it's a public entity or private entity. There are differences. A public entity is subject to a 0.15% loan fee. So basically it's 0.15% of the actual loan request. So if you're looking at like a $2 million loan, you're looking at a $3,000 loan application fee. There is a maximum of $75,000 and a minimum of $500. So the minimum fee amount would be $500, and the maximum, once they exceeded that $75,000, that would be the maximum fee amount. For private entities, that application fee, again, assessed against the amount of the loan request, is a 0.25% of the loan request. There is no maximum for private entities, and a minimum of $1,000 would be due at the time of application. So some of the things that we struggle with on that, I guess I should say, is figure out how to go back. Oops. I think the thing that we struggle with the most there is sometimes not always knowing that the application's due, or the application is going to be submitted, and so not having that forethought to reach out to the entity to let them know that application fee is due at the time the application fee is due at the time of their application. So making sure that if the districts are aware of that, have them reach out to us to let us know, so that we can work with them to get that loan application fee also processed at the same time their application's coming in. Okay, the application requirements, and this might be where we get into a little details of what needs to happen when an application comes in. The biggest thing is it's a fairly quick process for us to process it. I mean, there seems like there's a gap there, and that's part of just the processing of how it goes through and recommended to the board, and the board reviews, and then the approval. But the application of actually the process of reviewing the application is fairly quick and a turnaround with a lot of information. So therefore, it's important that all the information is provided in the application at the time of submittal, because otherwise we're spending a lot of time following up with the entities to get that information and make sure we're getting the right information. So encourage people, if they're applicants, if they reach out to you, if they have questions, to reach out to the staff here so that we can answer the questions and make sure we get the information from the get-go to make it easier on us and them. And that way they're not spending time providing a lot of information that we don't need. But a current project budget. Basically, we got to know what the project is going to cost and what amount is needed for the loan. I mean, there are times we get applications that they don't really even know for sure how much they need. So we kind of want to, and that's a time for us to talk to them and kind of talk through that. Like, what are you going to need the loan for? The full project cost, just for the design work, just for the actual construction? The other thing is what, when you talk about what is needed, what amount is needed for the entity, I think like Kelly elaborated earlier about cost share. Sometimes cost share funds may not be available. So the MoDOT portion that we're contributing to the project may be in future years, especially if it's one of the ones that has $2.5 million available over 4 years for the $10 million. The question would be is if the entity needs the cash to cash flow our portion, they can get a loan from the MTFC to basically cover our portion, but they will be responsible for covering that repayment and the interest on that. And then once our cost share funds come available, we can pay the entity or apply that to the loan payment to pay that down. But so basically they need to know in the current budget of the project, and in that current budget, even though they may only be financially responsible for 50% of the project, do they need the MoDOT share for acceleration? Do they only need their share? Do they need it for all phases, etc.? The project plan and schedule, and that's critical, as when does the entity need the money? When does the entity need the loan? When do they need the money in their account? So part of that can be impacted by who's hiring or performing the work. Is the city hiring the consultant that's going to do the design work? Is the entity or the city, or I'm sorry, I say city, but use that interchangeably for the borrower. Are they hiring the contractor? Are they letting the project and getting the contract with the contractor? And if so, do they need then, again, do they need the MoDOT portion, or do they only need their cost of the project? So those are the kinds of things that to think of. In addition, remember, if the project is let by MoDOT's expectation in all of our projects when we do that is to reduce the risk to us, we do require the entity to deposit the money up front prior to advertisement. So they kind of need to know what the project schedule is, the timing of that, and then what that means for them financially, like when they need the money to be able to deposit with us, or when they need the money to be able to pay the contractor or the consultant and so forth. So they need to really take that into consideration, because that will play a part in the loan review and application. So that kind of rolls into the timing of disbursement. So the entity's benefit, we disperse in project phases. This is so the entity doesn't, so if they need a $10 million loan for the total project cost, they don't have to pay interest on that $10 million as soon as the loan's dispersed or approved. Basically, we'll disperse based on their need. So typically, for instance, we might disperse at PE, and then at right-of-way A date, then at construction advertisement, for example. So that basically, we'd only disperse the amount needed at PE, only the amount needed then for the right-of-way A date, only the amount needed then for the construction advertisement. So we'll need to know the amount and the anticipated date of those disbursements. Again, is this only the entity's share? Are they going to get a loan to accelerate the cost share? Those are the things that we'll need. So if they have a cost share agreement in place and they're getting an MTFC loan to kind of coordinate that with that, they'll need to think about what those requirements will be for either a loan disbursement. For a deposit with MoDOT, or a commitment to then secure the contract or the consultant for payment. And then, does the entity have a preferred repayment date? So basically, a minimum of annual payments is required. So we do require at least one annual payment per year. And then typically we want those within the first year of disbursement. So if your first disbursement is April 1st of 2022, then by April 1st of 2023, we would expect your first repayment, or the entity's repayment. So really, and a lot of times we'll get the question from the entity, like, well, when do you want us to repay it? And really, we really leave that up to the entity to kind of coordinate with maybe their fiscal year cycle, other outstanding debt, and so forth. So we kind of leave that up to them. So that's the kind of things that we need them to identify in their loan application. The next thing is, what is the entity pledging for repayment? A lot of times they'll just want to say our general fund. Well, I need to know what's going into your general fund. I need to know where that revenue stream's coming from. What is the history of that pledge? Like, again, kind of like what I talked about. Is it a transportation sales tax? What is the base? What's the revenue history? Does it sunset? How long has it existed? Those are the kinds of things that if they can provide that information or point that in their financial statements, that's the kind of information we're looking for to assess the validity of the loan. And then again, in that same thing is, what other pledges or commitments already exist against that source? Are there existing loans? Are there existing commitments? Are there other operating costs that have to come out of that? And what are those things? So we identify those and take those into consideration when assessing the loan validity. Okay, and then kind of the loan approval process. So again, support for the items requested in the loan application is crucial. We review to ensure the application is compliant with the MTFC guidelines. That's ensuring it's an eligible project, it's an eligible entity, the application's complete, the application fee has been submitted, as well as the district supports the project. That's basically the district's aware of the project and agrees it's a good project. Based on the information in the application, then the financial services staff will coordinate with the entity to kind of draft loan terms and conditions. What's the loan amount? What's the disbursements, like we talked about, including the amount and the timing, the repayment expectations, the payment amount, the frequency, the date of repayment. This is to ensure the entity agrees with the loan, as it's going to be recommended to the MTFC board. What we don't want to do is take a loan to the MTFC board for approval and it not align with what we thought that the entity was wanting for as far as term loans and repayment. So typically we'll kind of draft that, kind of coordinate with them to make sure they agree, so we can make recommendation to the board. Again, like I said, in those things that we are getting, we're determining from a credit security standpoint if it's an adequate loan. Do we think it's a good loan and we think they can afford it? Once we make that recommendation to the board, we're based on those loan assessments again. So those things that we put in that loan terms, we kind of basically make a recommendation to them based on the things that we've looked at and talked about with the entity. Once the board approves, denies based on that recommendation, then the entity will be notified in writing. And typically we can let the entity know the day of the MTFC board meeting what the status of that loan request is. But we will follow up with a formal letter to notify them of that standing and that approval. Once that is done and the board has approved it, it's really a green light to get the loan agreement executed. The loan agreement must be executed prior to the first disbursement. Absolutely no disbursements will go out without an executed loan agreement, and that's a fully executed loan agreement from the city and from the MTFC. So the one thing I think is something that Kelly pointed out in the cost share, take this into consideration when determining when to submit an application. You need to ensure the entity considers what their particular process is for executing an agreement. Like, for example, do they need multiple council readings? How frequent are those meetings? How long will it take to get that agreement executed? Because you got to take all kind of work backwards. When do you need your first disbursement? Because we need to make sure that not only have we gotten through the review and approval process, but we've got the loan agreement executed to provide ample time for us to make sure that disbursement can take place and meet the entity's needs. Okay, then it's really into administering the loan. So once, like I said, the agreement must be executed within 6 months of the loan approval, and then the disbursements. Disbursements, prior to any disbursement, confirmation of the project schedule and disbursement needed is obtained. So basically, before we'll send the money out, even though it's what's in the loan agreement, we'll usually reach out to the entity and say we're showing that June 1st you are scheduled for a disbursement for right away. So we just want to make sure your project's still on schedule. You're still anticipating needing X dollar amount on June 1st, and we'll confirm and get approval from them to say yes, that's still the plan, or no, that's not the plan. This project has been delayed, and it'll be September before we'll need that. And if that is the case, we'll work with the entity to revise those loan terms and push that loan disbursement out. So also, disbursements can be made directly to the entity or to MoDOT on the entity's behalf. So again, that's another thing we'll typically clarify when we send out the confirmation on the schedule too. This disbursement is scheduled to be submitted to the city, and then we'll confirm their account number to make sure we're sending that. Or we'll say this disbursement is scheduled to be deposited with MoDOT's local fund on the entity's behalf. So we'll confirm that too to make sure that's still the plan and that nothing's changed there. So again, for example, with a cost share project, if MoDOT's letting the project, we require the entity to deposit their portion of the construction project prior to advertisement. If it's being funded via an MTFC loan, their portion, we would disperse directly on behalf of the entity rather than to them to turn around and have them cut a check back to us. We'll make that disbursement directly to the local fund on their behalf. With that, with the disbursements, if it's done to the entity, all disbursements are done via ACH and scheduled to be deposited on the disbursement date that's executed or outlined in the agreement. So basically, they will have the money. If we tell them that June 1 is when the disbursement's made, that money should be in their account June 1 that morning, so they should have those funds available to them. Again, and then repayment. So loan payment reminders are sent via email to the entity up to 1 month prior to the due date. Payments more than 15 days late will be assessed a 2% late payment fee. And by all means, we try to do everything we can to avoid that. Not only will we send the loan payment reminders, typically we will ask them to confirm they've received it and to notify us when that payment's scheduled for payment. So, a lot of the times we really encourage ACH payments too, directly to us, electronic payments. So we ask them to confirm when they've scheduled that, and so that we then confirm once we've received that payment. There is no prepayment penalty for early payoff or additional payments. So really, again, so you talk about some of these accelerations. A lot of times we do see interest in the MTFC to accelerate cost share funds that may not be available for us. The entity can then go ahead and move the project along and not potentially delay the project due to availability of MoDOT's cost share funds. They'll just go ahead and pay that. And I think the cost for the loan is usually fairly, I have to say our interest rates have been fairly low. So that's an easy way for them to go ahead and move the project alone with little cost to them, with little less risk than maybe even inflationary costs. So Okay, and then the other thing I talked about, payments, even the payments, we do ask that most payments be made electronically if possible, and we do still have some that come by paper check, but we do also request that they, kind of picky, we ask that they pay those on the scheduled due date. As much as it's nice to get money early, we do kind of say, hey, if you're going to make this payment, if you could just schedule it on the date it's due, that's great, because then we're kind of anticipating it and it's easy to keep track of and monitor. So that's kind of really kind of a summary, but available for loan right now as of December 31st of 2021, we had 26 active loans that we were servicing that totaled original loans of $135 million on those loans. With that outstanding balance and pending disbursements on those active loans, because we still have some active loans that are still scheduled for disbursements, we have approximately $36.5 million available for new loans currently. We have seen a lot of interest in the MTFC, and I anticipate hopefully we'll continue to see that. So here's some helpful links. I think Kelly kind of shared those earlier too, with the partnership website. This website right here is exactly where you'll find all the information related to the MTFC or the cost share. And then below that, I also showed the important dates, and that important dates, when you click on that or access that website, it basically shows the due dates for all the applications, cost share or MTFC. Let's see, also in this first one, I talked about the partnership website there, kind of like Kelly alluded to, you'll find the contact information for the staff, email and phone numbers, as well as links to the Department of Economic Development, like Kelly referenced, for the economic development set aside of the cost share. Also on that, you'll find a link to the partnership application, or the application can be accessed for completion and submission. So that's an electronic application that's filled out there, and that is accessible there at the partnership development website. The next due date for the MTFC is March 15th, and that is for the May 4th meeting. Just know that these meeting dates do sometimes change due to scheduling conflicts. So if you're aware of an entity going to submit an application, give us a heads up. That way we can make sure we can coordinate ahead of time to ensure people know that the importance of making sure we can keep that meeting on schedule if we can. The only other thing I have is there is a partnership pamphlet that we've recently put together. They used to exist, and we just kind of revamped it, and they're available. So they're paper pamphlets, and I know so many things now are electronic and you can access them on your phones and your smart devices, but we do have paper pamphlets that can contain some of this basic information, including contact information, which is the email, website, and so forth, and phone numbers. So if you're interested in copies for meetings that you're attending, or just would like to have something to hand out, let us know and we can provide you copies of those. The other thing here then is just the contact information, like Kelly alluded to, this partnership.development@modot.mo.gov. Again, it's an email site or an email that is accessed by multiple staff, so we can make sure that we can address any questions and get those routed to the staff responsible for those partnership programs and get answers to you. You'll also see here listed staff, myself, Sunshine Wilde, and my phone number, and then Maggie Darrow, who is also listed with her phone number. She's the primary staff responsible for the MTFC program. She is currently on extended leave, so I'm filling in for her. So any questions you have currently, again, send to this email, partnership.development@mo.gov, or reach out to me directly. Kenny, that's all I have, so I'll turn it back over to you and take any questions that we have.
All right, thank you, Sunny. Great job on your presentation. Really appreciate that. At this time, we will take questions for Sunny, and Kelly could probably answer questions as well about her presentation as well. So I'm looking at the pod, question and answer pod right now. I don't see any questions, but if you want to ask a verbal question, you can raise your hand in the WebEx tool. We will unmute you so you can answer, or so you can ask your question. Sunny, I do have a question. What's the biggest MTFC loan we've ever done?
Obviously, the one that we've done for MoDOT itself for the Roachport project.
Okay.
And that one's still scheduled yet for disbursement. So we'll see that disbursement coming up soon.
And we've done some other ones for some of our big corridor projects, right, in the past? Like 36 and routes like that.
It's a question I'm not really sure, Kenny, honestly.
No problem. All right, I'm not seeing any questions, Charlotte. Do you see anybody with their hand raised? I'm not seeing anyone. All right, again, I want to thank Kelly and Sunny for their presentation today. If we didn't get to your questions on this topic today, please reach out to any of today's presenters. There was lots of contact information that was available on the slides. I hope today's presentation provided a better understanding of the financing options for projects that MoDOT provides. Thank you for participating in this webinar. We appreciate any feedback on how we can improve this format or the content of future webinars.